Hey everyone, I'm Jeremy Szafron. This is Kitco News. Don't forget to hit that subscribe button for the latest. Now today we have a jam-packed show as we dive into major headlines that are shaking the financial world. This weekend, U.S. politics experienced a seismic shift. President Joe Biden announced on X that he is dropping out of the 2024 presidential race and endorsing Vice President Kamala Harris as the Democratic nominee. Now, this unprecedented move has created significant political uncertainty and mixed reactions in the financial markets. Gold futures surged last week to a new high of 24.63 U.S. per ounce as investors continued to flock towards safe haven assets. And today, gold on the spot side is trading just below the $2,400 mark, showing surprising stability despite ongoing volatility. And meanwhile, the dollar index fell by 1.2%, reflecting its sensitivity to the evolving political landscape. Now, the Democratic Party faces a tight deadline to finalize its nominee. Although Harris has Biden's endorsement, she hasn't secured the nomination yet. Now, the Democratic National Convention in August will be crucial as delegates vote to confirm the nominee. Of course, key figures like Hillary Clinton and George Soros have endorsed Harris. Surprisingly, not really, but some donors and party members are pushing for an open convention to ensure a competitive process, including former President Barack Obama. And has anyone had any computer problems lately? CrowdStrike is in the spotlight after a global IT outage disrupted services worldwide. Now, this outage caused by a software update malfunction led to an 11% drop in their stock price. Additionally, it's now known the chief security officer, Sean Henry, sold 4,000 shares just days before the outage, raising some questions here. Lastly, with the possibility of Donald Trump returning to the White House, markets are bracing for significant policy shifts. Now, remember, Trump's agenda of deregulation, tax cuts, and aggressive trade measures could have profound impacts on various sectors, creating both opportunities and challenges for investors. And to help us unpack these developments and understand what it means for the markets, let's welcome back our friend Bill Baruch, president of Blue Line Futures. Hey, Bill, welcome back to the show.
Thanks for having me. It's always a pleasure to join you.
Thanks, man. I mean, it's been crazy. It's been a crazy couple of weeks. We had an assassination attempt on Donald Trump. We had this major outage that brought down everything, it seems. Airlines still dealing with the mess. And then President Biden's decision to drop out of the 2024 race. Markets have been a little bit mixed on the reaction side here. I think all three kind of positive today. Talk to me a little bit about investor sentiment. What are market reactions and what's being looked at today here, Bill?
Yeah, I mean, you almost were looking for more news coming into last week, and then all of a sudden it just all collided at once here, and it's sort of really tough to dissect. I mean, at the end of the day, what we're seeing being priced in is the Trump trade. Now, you don't want to chase things too much in the sense that there's still nothing certain at this point, and no one really knows what the Trump trade fully is. We've seen Bitcoin trade quite a bit higher. J.D. Vance is pro-Bitcoin as well. So him bringing and announcing J.D. Vance as the vice president nominee with him running has been a tailwind to that space. For us, we've really kind of continued to stay in the sectors that we were already sort of planning and rotating into. And I think the Trump trade just brings additional tailwinds. So we look to him as continuing to encourage an onshoring. We added a name like Intel about a month ago. We'll continue to look at in that space, what does onshoring mean? We've really liked to see, we own United Rentals in top end of our portfolios. It's also in their concentrated fund where we own no more than 10 names. And United Rentals, the exposure to construction equipment, but they're all domestic exposure. You're not Caterpillar with a lot of exposure in China per se. So we're looking at names that really can bring home our exposure in sorts. Some of the stuff on our radar, that performed very well recently, oil services, midstream energy, as well as looking at names in the power space, utilities. So I think those are things that we're looking to get more exposure in, not just because of the Trump trade, but overall because things have headed that direction because of AI and onshoring. So I think it's a really interesting time. One thing additionally I'll add last week that you didn't mention, kind of because it did go under the radar a little bit, but China in their plenum, which I think they only have maybe twice a decade, talked about prioritizing high quality growth, and we saw the bottom fall out of copper last week after that. So there continues to be different news headwinds that keep coming for this markets.
Yeah, and it moves so damn fast here, Bill. Okay, quickly, I'm just going to go back to it. Even though we, like you said, don't really know much, but one of the things that we do know is that there's this open convention. There's other candidates vying for the nomination outside of just Kamala Harris. And I guess when it comes to you just talking about, Trump and Harris have such different policies. So, what strategies should investors adopt looking at these potential risks, looking forward?
Yeah, and again, it's what you said it. You hit the nail on the head here. We're not even sure there's other candidates are going to emerge. Are they testing the wherewithal and the polling of Kamala Harris here at this moment? And is she going to be the one that they run with? I don't know. I mean, nothing would surprise me at this point, truly. So I think she's had I think you've seen the odds of the Trump victory sort of even tick a little bit. So again, as I focus on how we're investing, the presidential election, there's going to be ebbs and flows, and there's going to be volatility within markets. And what I've seen for under the hood is really what's driving me more than anything. And I've seen you with a higher high from that March high, and then when we made a new high here in the S&P over this last month, we've seen a divergence of momentum, and that kind of led to this recent sell-off. Are we pricing in things almost to perfection? Are we overpricing Trump at the moment, and there's going to be ebbs and flows within this election race? So does that bring in things like Bitcoin that may have responded too quickly off of his odds? So there's a lot of questions as a trader that I don't want to jump to conclusions. And one of my themes, and it really is how I position and sizing of my positions, and never putting my back against the wall. So that's really how I'm taking it here.
Good. And, there's so much narrative out there. One of the things that we do know is last week, gold futures surged to that new all-time high. Today, spot prices on the gold front are, trading just below 2,400, but pretty stable. At the same time, we saw the U.S. index fall a little bit on the dollar. What do you think is going to be happening here, in terms of Biden's exit, but more so if Trump, just on the commodity side, when we look at gold and things like that, anything surprising you here?
Yeah, I mean, it's a disappointing week last week to see gold hit a record high, and now we're basically $100 off that level. And, I do run a gold fund, and that's been, it's disappointing to see because I thought we might be getting a breakout and continuing to run. Copper was the first leg to really fall. Silver was the next domino, and then gold really fell from there. It might be, one of the worst performers here off the lows today on to start the week. But again, you had part of the Trump trade and narrative is devaluing the dollar potentially. So that did stoke a good move in gold coming into last week and through the first half of last week. But again, I come to China, and what we're seeing in China, not prioritizing high growth, they're prioritizing quality growth, high quality growth, and meaning they're going to stimulate less. However, we come in today, and they cut their rates across the board about 10 basis points or so. In the market, they've done this a couple times over the last year and a half, and it's just not enough. The market wants to see a 50 basis point, 75 basis point cut in some of these rates that China uses, and it just hasn't done that. These little bites down on the rates, the market's has not responded well to. In fact, many of the times over the last year when they've done it, we've seen commodities react negatively because it wasn't enough. And this comes on the heels of GDP data last Sunday coming in lower than expected too. So my biggest concern right here is China, and what does that mean for commodities?
Yeah, interesting. I mean, we're going to be watching that one closely. Before I let you go here, Bill, because I know you're rushed today. It's been a busy news day. The market, as you mentioned, in the U.S. at least, pricing in one cut. Some analysts saying they got to get a little bit more aggressive, maybe even do two. With Biden's exit adding to the layer of uncertainty here, talk to me about the Fed's future actions. I mean, obviously we're looking at data, but we're starting to see some cracks here. What are your thoughts?
I'm really glad you brought that up before we finished here, and that was another thing with where it started. What's the market rate pricing in now? First, I've been in the 3-cut camp really all year. I've been talking about that wherever I can vocalize it, and we're seeing 3 cuts as of today, being priced in with about a 50% probability, 3 cuts this year. And from there, they're expecting to cut, really at each meeting, potentially through the first half of next year as far as it goes out. And what I'm taking from there is now, do they just get it done and start off with July? What type of data do we have this week from PCE before the Fed meeting next week? So I'm really interested to see that they just potentially now with uncertainties in the election, it's not the current sitting person in the White House running against Trump as Biden would have been. Now it's potentially 2 new holders. Obviously, Trump has been a president prior, but now I think it does change the fact that maybe there's more uncertainty, and that could lead to a cut sooner than expected. So that's something to keep in mind. But when I go back to that Trump trade, you see a lot of quick reaction to how things reacted in the prior 2 weeks, and now you've also seen these rate cuts being priced in. If we have any strong data over the next week and a half, I mean, if inflation surprises, which I don't think it will, then we're gonna see quite a bit of volatility, I think, in the weeks to come, and it's that time of year too.
Yeah. Bill, I know you guys own this. So before you go, CrowdStrike, obviously we had, the spotlight on here. We had the global IT outage, disrupted services worldwide. I mean, I think the drop on the stock price was down 11%. Talk to me a little bit about this. Adding to the turmoil, Chief Security Officer Sean Henry sold 4,000 shares just days before the outage. You guys own CrowdStrike. What are your thoughts here just before I get you going?
Yeah, I don't think the Chief Security Officer is selling some of this. I would assume that's more of just a planned sale, and it does nothing to do with the what happened here, or him knowing that something was going to happen. But overall, this down again heavy today as some of the aftermath. You see Delta with continued flight delays and other issues that have continued to linger. Maybe it was a little worse than people had thought on Friday. Maybe a little worse than I even really thought on Friday. Now, I haven't done anything to the position that we own. However, I'm uncomfortable. Where on Friday, I thought that maybe I wouldn't be uncomfortable seeing this break 270s, 275. I am a bit more uncomfortable today, seeing how quickly it is down again today. We've used the opportunity of weakness to get new monies up to our allocation weight in CrowdStrike. We're not increasing the weighting in our model to CrowdStrike, but we're getting new monies that have come in the past month or two after with CrowdStrike breaking out after earnings, and then the S&P inclusion move. So we didn't want to add CrowdStrike as a closed-end at $400. We were using this and viewing this as an opportunity to add. But with that said, I'm not pleasantly happy, seeing this trade below 275 so quickly after holding ground a little bit on Friday.
Yeah, volatility for certain. All right, my friend, Bill Baruch joining us today from Chicago. Thanks, President of Blue Line Futures, of course. Appreciate your time, bud. Appreciate it.
Thank you. Thank you for having me.
We'll see you soon. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We have lots to come this week. Hit that notification button, and we'll see you next time.